This is episode 29 of the Tax Smart Daily, a daily video series for real estate investors to learn how to be tax smart. I'm Brandon Hall. Before we get started, I invite you to join our Tax Smart Facebook group and the Tax Smart newsletter. Links to both of those are in the description of this video. If you have any questions or if anything that I say resonates with you, please drop me a comment. Anybody that leaves comments, you guys are my oxygen. You keep bringing me back to the table. I really love engaging with you, so please do that. Please drop me a comment with your questions or anything that resonated with you. And lastly, hit that subscribe button. And once you subscribe, click the bell icon. That way you get notified of any future videos that we drop. And we have the daily Tax Smart video. We have podcasts, live Q&As, all sorts of cool stuff. Don't want you to miss them. Today's topic is about real estate professional status, but a little bit different than what we normally talk about. Normally we talk about real estate professional status in the context of rental losses, right? So a rental loss is by default passive, and passive losses can only offset passive income or gain on sale from passive activities. But if I qualify as a real estate professional and if I materially participate in the rental activity or activities, if you group, then the rental activity is considered non-passive. The loss is then considered non-passive. And a non-passive loss can offset my W-2 income, my business income, gain on stock sale, other types of income. So if a rental activity is by default passive, then it's obviously super beneficial to qualify as a real estate professional because most rental activities produce losses, especially after you factor in depreciation. So it's beneficial to qualify as a real estate professional and materially participate in the rental activity so that I can claim the tax losses that my rentals are producing every single year. If I don't qualify as a real estate professional and if I don't materially participate in my rental activities, then my rental losses are going to be considered passive. And like I said, they only offset passive income or gain on sale from passive activity. But if you don't have passive income, or if you don't have gain on sale from a passive activity, then you just have passive losses and they become suspended and carried forward. You can't use them to offset your W-2 income, your business income, gain on stock sale, all that other type of income. So beneficial to qualify as a real estate professional to avoid having our passive losses from our rental activities be suspended because we basically change them to be non-passive losses to offset our W-2 income and our business income. But what happens if I don't actually have rental losses? That's the question that we're going to explore today. So if I don't actually have rental losses, if my rental real estate is cash flowing so much that after all expenses, including depreciation, I have net taxable income, does real estate professional status help me at all? And the answer is maybe. The real answer is probably not, but there is a maybe. So real estate professional status, if I have a passive loss and that loss gets suspended, not very helpful. But if I have a non-passive loss, very helpful. But if I have passive income versus non-passive income, what's really the tax difference there? There's really no tax difference until you get into the net investment income tax. That's a 3.8% surtax. That's a 3.8% surtax on capital gain income, passive income, rental income in excess. If your total modified adjusted gross income is in excess of $250,000, this 3.8% surtax comes into play. That's also why if you sold a bunch of stock and you were expecting to pay 20% long-term capital gain rates, you actually pay a 23.8% long-term capital gain rate plus the net investment income tax that is kicked in when you're above that $250K modified adjusted gross income number. The net investment income tax came into play with Obamacare as one way to help balance the budget and pay for the Obamacare initiative. So that's where that came from, but that's a 3.8% surtax that is imposed on basically passive activities, passive income, capital gain income. Now, if I'm a real estate professional, even if I have positive income, it's not super helpful for me because I can't use any, there's no losses, right? So typically you don't talk about real estate professional status unless there are losses. But in this case, let's say that I have, let's say that I have a $250K W-2 job. So I'm already at that $250,000 modified adjusted gross income number. And it's not like, so for all the tax people listening, you're like, oh, you can't have a $250K W-2 and $250K modified adjusted gross income. I know. So let's just assume that I have $250,000 of modified adjusted gross income. And then let's assume on top of that, I have an additional $100,000 of net taxable rental income after depreciation. If I'm not a real estate professional and I'm not materially participating in the activities, then I pay an additional $3,800 tax, a 3.8% surtax on my net rental income. If I'm a real estate professional and if I'm materially participating in those rental activities, they're non-passive and I avoid that $3,800 surtax. Now, is it going to be worth it for you to try to hit the real estate professional status rules, which we discussed in the Tax Smart Daily episode number 1? So go back and check that out. They are extensive. It's hard to qualify as a real estate professional. So is it worth it for $3,800? Probably not. So maybe you need $200,000 or $300,000 of net rental income. And now we're talking about like some pretty serious earnings, probably later on in life. Where you might not want to be a real estate professional anyway. So kind of a toss up. But here's the other thing that I like people to think about too. In real estate and in business, you never really know what opportunities are going to pop up until they basically hit you in the face. So you might be like sitting on a bunch of dry powder. We call dry powder like tons of capital. Maybe you've got $200,000, $300,000, $400,000 sitting in your bank account. It's eating a hole in your pocket. You're getting really nervous. You get some FOMO, but because you see all these other people on Facebook crushing it, Instagram, they're crushing it. They're buying all these deals, and you're sitting here going, "Man, inflation's crushing me. It's eating away at my $300,000 in cash that I have in my bank account. Oh my gosh." And you start trying to figure out how to deploy it. But in real estate, you could be having that mindset, and then all of a sudden a big deal pops up that you can then go and execute on because you have the capital ready to rock and roll. And where the real estate professional status conversation comes into play here is we know that being a real estate professional, utilizing a cost segregation study, increasing our bonus depreciation, that's going to produce a large passive loss. And we know that if we're a real estate professional and materially participate, that passive loss will be considered a non-passive loss and we'll be able to offset our W-2 income. So if I buy $1 million property, I get a cost segregation study done, maybe I get $200,000 of bonus depreciation, maybe that's about what my tax loss is. That $200,000 tax loss could save me like $60,000 in taxes between federal and state. So it pays to be a real estate professional, but it also pays to be a real estate professional even when you don't have that opportunity ready to go. Because let's say that let's say that $1 million opportunity comes around in November. So it's middle of November, right before Thanksgiving. You put an offer on a property, you close on it mid-December. You've got 2 weeks to hit 750 hours and more than half your time to qualify as a real estate professional. It's just not going to happen. Obviously, there's not enough hours. What if you acquire something in October, beginning of October? Now you've got 3 months to hit the 750 hours and the more than half your time test. So my point here is that it may be beneficial for you if you already have a rental portfolio. It may be beneficial for you today, like early in the year, to start tracking towards real estate professional status, because you don't know what opportunities are going to come up later in the year that may make real estate professional status extremely valuable for you. And I'm telling you this because we've seen this mistake in the past where people say, my net income is basically zero, or I'm investing in mobile home parks. And so, I'm netting net taxable income after depreciation. It's like $80,000 a year. Real estate professional status isn't going to help me. And then November comes around and they've got an opportunity to buy a $5 million apartment complex. But if you don't have enough hours to qualify as a real estate professional and you can't get enough hours by the end of the year on that property, it would have paid if you would have tried to be a real estate professional, even though you didn't need to be one, even though you didn't have the losses, or even though you weren't expecting the losses to come down the pipeline. So keep that in mind. Real estate professional status, at least tracking towards it, just really provides you with some flexibility, especially on the acquisition piece. And I expect that we're going to see a lot of our clients acquiring large properties over the coming 2 to 3 years, especially if there's any sort of like market softening or as more supply hits the market and demand comes down to meet that. So thanks for watching today's video of the Tax Smart Daily. If you have any questions or comments, drop them below and let me know your thoughts on the whole real estate professional thing. Tracking towards real estate professional status, even though you don't really need it. Let me know what your thoughts are there, because I think that's something people don't really think about is November, December could come around, you get a big property opportunity, and then all of a sudden you're going, crap, I wish I was a real estate professional. I wish I had the hours. So let me know what you think about that in the comments below. I'd really appreciate that. And join us on our various social groups. Join us online. We've got a whole bunch of links in the description of this video that you can click on and follow us everywhere. Thanks so much.